My next guest sniffing some of this out. Want to bring in Bell Point Chief Strategist David Nelson. So, David, I mean, listen, sometimes it feels like paint by numbers when I have the guest on and they say buy value simply because it's down or it's underperforming. But we know that there's some great companies in this mix.
I think you have to drill down further than that. I think at the broad index level, large cap secular growth has clearly been the leader. There's a lot of garbage in value, so that's part of the problem.
Anywhere up to 40% of so-called zombie companies.
Yeah,
right?
There's a lot of zombie companies out there. But to those people who think that the Magnificent Seven were the only stocks that did well this year, that was nonsense. Because if you drill down further, you can see that 25% of the S&P 500 beat the index this year. That's 125 companies. 60% were up year to date. Even in the Russell 2000, which is a pretty maligned index, didn't do that well this year. You had 17 companies beat out NVIDIA. 500 companies beat the S&P. So there are things to do out there. There are places to go. And I would probably look outside of the Mag 7 at this point because lightning rarely strikes twice in the same place.
But I want to pick up on that because I'm like you. I'm a stock picker. And it's a cliche, but this year has been, last year even in the down market, it has been a stock picker's market, but it is a lot harder, to find 17 names really in the Russell 2000 that are going to outperform or even 120 out of 500. So it's easier said than done, but it's an exercise that must be done if you want to beat this market.
And sometimes beating the market is going to be very, very tough. Sometimes it's just keeping up with the market.
Right.
In terms of the Russell 2000 and small cap stocks, I would look to active managers for the most part of that because that's where research really pays off.
Right.
How many analysts are covering Apple? How many analysts are covering Apple?
Right.
We know everything about these companies. A lot of these companies are undercovered and there's some real gems there.
Great idea. All right, let's talk about some names that you like. I'm in Deere. I'm getting waxed. I'm glad it's on your list. What's going on?
I think it's tax loss selling right now. But look, to be honest, the quarter wasn't great.
Yeah, no.
And they're suffering from a lot of the same thing. A lot of machinery companies that are living with a lot of inventory out there that has to be cleared out. The good news is that they're not ramping up production. If anything, they're going to cut production. That'll make the cycle shorter. I think this is the exact time to start scaling into this name.
McKesson?
McKesson, controversial stock. This is one of those companies the government hates because they make so much money. This is a free cash flow machine.
Right.
7% free cash flow yield.
Right.
They're a pharmacy benefit manufacturer. They want to shut these guys down.
By the way, I got a great trivia for you. The reason we have quarterly earnings and they have to be audited now, because of McKesson.
I didn't know that.
It's about 100 years ago. They pulled off one of the biggest scams out there. And we, of course, have Intuit, which reported stocks up big.
It's probably not the best day to buy it today. It's breaking out to a 52-week high. It'll back and fill. There'll be a better opportunity here. But this is about AI as well.